Welcome back to the Real Estate 401k Show. I'm your host, Mike Weinstein, alongside Justin Frederick from the Frederick team at Fairway Independent Mortgage and my business partner, Ryan Gerdes. You're going to want to text the word market to 623-AZ-RECON. I'm making it simple for you. I'm telling you ahead of time. Just break out your phone and text the word market to 623-AZ-RECON. I thought it'd be a good time. There's just, oh man, so much going on in the market. So much misinformation, so much that goes into the news where the news might be talking about the country as a whole, and people don't understand how Arizona it's in its own microcosm, and things operate really differently here. So I want to kind of talk about the market and how we see things, but I thought it'd be good just to give everybody some numbers and some stats, and just to be clear, by the time this thing hits the interwebs, this data will be about a year old, or a year. That would be bad.
Jeez.
About a week old. Well, that's Justin's fault. He poured us a nice glass of.
So what did you bring
Uncle
here,
Nearest.
Justin?
Uncle Nearest.
All right,
1885.
Let's show the bottle to the
Okay,
camera.
Oh yeah.
Let's do that.
Yeah.
So,
Yeah, here you go. It's not very well known, but
It's tasty though.
it's
Yeah.
very tasty.
Yeah.
A little caramel flavor in it.
Cheers, gentlemen.
Cheers, guys.
Cheers.
Yeah, this is great.
Yeah. All right. All right.
Yeah. Salud. Or skull. I've been watching a lot of Viking shows.
Nostrovia, skol, salud. Yeah.
All right, so one of the first things that we always have to take a look at, I think, especially when it comes down to the Arizona real estate market, you hear people talking about how inventory is low, and I think there's a lot of confusion about inventory. Because currently, when you take a look at the MLS, the Arizona Regional Multiple Listing Service, there's about 18,000 available properties. And people look at that and go, whoa, hey, why is everybody telling me that inventory is low? Well, we like to break down those numbers because unless our listeners are buying in places like Sedona, White Mountains, Flagstaff, or Tucson, this number that you might be hearing doesn't mean a lot to you. So
I think it's very applicable for a commercial approach. Like if you're like a big anchor or something and you're, hey, do we enter the real estate market in Arizona and what do those numbers look like?
Sure.
This is one of those numbers you might look at, but you're exactly right.
And if you are looking to bring a big anchor store, we want to talk to you.
For sure.
But I always like to look at, because traditionally our buyers and our investors, for the most part, looking in the Phoenix metropolitan area, but it's also important to clarify that we work with investors and help them buy properties, invest in properties all over the state of Arizona. But currently, at the time that we went to record this, when we took a look at active single-family homes in Maricopa County, we were just over 9,600. And people are trying to figure out, how, is the market going to crash? Home prices are stable, even though interest rates are going up. It doesn't make sense to me. Well, with the amount of jobs coming here, the amount of people moving here, at the end of the day, Ryan, 9,600 homes is not a lot of homes.
No, and the funny thing is, so believe it or not, I hike. My 4 low works really good. And so we were going up Squaw Peak the other day, and we get to the top of it, and it was amazing, just kind of absorbing everything, because all there is, as far as the eye can see, is homes, not skyscrapers. Obviously, downtown Phoenix, we have a number of different high rises and whatnot.
We call a high rise when you get above 12 stories.
Yeah. And just as far as the eye can see, there's homes, but you drive to the end of that, and all there is land. And so we have the ability to continue to grow before we need to start getting vertical. And so there is a ton of people moving over here. So more importantly than that 9,600 is how many people are moving here, right? Because 96 is a big number in a population of, 500,000, right? But we're dealing with millions here and hundreds of thousands every year still moving in. So I look at that. The other number that really interests me is absorption rate. And so absorption rate is the matter of how fast a home is sold pursuant to when it goes on the market. How fast does it get eaten up, right? So we're seeing homes, if they're priced well, if they're showing well, if they're doing all the right things for accessibility, making it easier for buyers to transact, those things are still only staying 7 to 12 days on the market. And that's even for, your $1 million plus homes. So there is still a massive appetite.
Yeah, and just to clarify, absorption rate and monthly supply to really help put it in perspective, we're basically a 3-month supply. So what this means is if over the next 3 months, not one new listing hits the market, we will run out of inventory altogether.
Right.
All right, so let's dig into some of the other numbers, and then Justin, I want to throw it to you, kind of I want to get everybody's perspective of how they're seeing the market. You're talking to people on the loan side, and we're obviously talking to people on the real estate side. But currently in Arizona and in the MLS, the average list price is just over $847,000. It doesn't mean that that's what your home is worth, and it doesn't mean that every house on the MLS is listed properly. The median list price is $495,000. The average sales price is $580,000, and the median sales price is $445,000. That really is a snippet to what is going on in our MLS and what is going on in the Phoenix metropolitan area. Now, Justin, numbers are numbers. Let's bring a little bit, not so much of emotion into it, but real life into this. What are you seeing? What are you experiencing? What are your conversations looking like?
So as of right now, our mortgage applications are up year over year. We're up 6% over last year, which is great. I mean, to see the activity coming back is nice. Also, just to let you know, our average loan size currently is $363,000. So if you're looking at your average sales price and what the average loan amount is, you're seeing that there's people walking in, putting down good down payments on these properties. I feel like we've had a huge shift in as far as the type of borrower coming in. We're starting to see more higher end types of clients coming in, and we're getting our first time home buyers now. I don't know if you guys you talked about this, but the Home in 5 Platinum program it's really good for home affordability. So this program made interest rates a percent cheaper for first-time home buyers, which has helped home affordability for those first-time home buyers, helping them get up to these purchase prices so they can actually find a home or get into a home. So I think that we're moving in the right direction with making sure that we're helping clients across the board. And I believe that's why we're starting to see more applications, because as these programs are getting marketed and people are starting to find out about them, it's helping. But I'm also seeing I feel like we're seeing a lot more people just dropping their rates or keeping those homes and going ahead and moving because they were expecting rates to be down at this point already.
All right, if you'd like some more information on understanding the numbers, if you'd like to get a hold of this great data sheet that we have right here that includes all the numbers and understand how it relates to you and your investment strategies and buying and selling strategies, all you got to do is text the word market to 623-AZ-RECON. That's market to 623-AZ-RECON. Ryan, I wasn't necessarily wanting to go into the direction of first-time home buyers, but Justin did just bring it up. Of all the inventory on the market, homes under $400,000 only represents about 31% of the inventory. I am just...
Yeah, I think you're reading the wrong line, brother. Because that was interesting to me too.
No, I just added up, between $0 and $400,000.
Oh, okay, sorry. Yeah,
I never make mistakes, bro.
Mm-hmm.
He did math there pretty well.
Mm-hmm.
And my shoes are still on.
Yeah.
I'm not a fear monger, but I'm just saying first-time home buyers are running out of time.
I think that we need to define what a first-time home buyer is here in this market too.
Okay.
So, because I look at this and we have a number of different price ranges that you can kind of sift through and see what the activity is per price range. And so what you're alluding to is everything under 400, but we have everything in here broken down by increments of 200,000. And so when you look at the increment of $400,000 to $600,000 units or properties that are on the market, they eat up the highest share of any other matrix, right? So they're at 65.75, whereas between 200 and 400 is 54.34. But the most interesting thing to me is the days on market. While it's only 3 days lower than the 200 to 400, it still is the number one as far as the most aggressive. So what that tells me is that there's a lot of first-time home buyers in that market right there, because that's where the most activity is. And history has always taught us that there's always going to be more first-time home buyers than there are second, third, so on and so forth, right? So I would say if you're a first-time home buyer and this is your price range, you need to be ready to be aggressive. You need to understand that you're going to have more competition than any other price point if you're buying between that 400,000 and 600,000. That being said, you need somebody, and you need good education and representation to understand what it's going to take to win in that arena. Okay. Now, if you're going above and beyond that, you're going to have a little bit less competition. You should be able to have a little bit more of a buyer's market than a seller's market when you're approaching that price range in the greater state of Arizona.
Yeah.
Now, what this is, like you had mentioned at the very beginning of this segment, this is not talking about specific like zip codes or municipalities. So we need to sit down, understand what your goals are, whether it's you're wanting to be in Peoria or Paradise Valley or Tempe or Mesa, because we need to run all these numbers for each one of those, because you're going to have your own specific set of numbers and different market conditions that you need to pay attention to before you need to understand what your game plan is walking into that.
All right, and Justin already addressed this, but instinct is everything. We've been diving deep into numbers. And again, if you'd like to get a hold of these numbers at any time, all you got to do is text the word market to 623-AZ-RECON. That's market to 623-AZ-RECON. We're diving into the numbers. I know you're an analytical guy. I know you love you love numbers, you love contracts, but instinctually, when you just step back and you got that 36,000-foot view, how are you seeing the market?
I'm seeing values slow, and they've been slow. I think that we're at the trough. I think that we're at the bottom of the market right now. I think that we're starting to see a lot more volume. And it's funny because a lot of people think, oh, we're at the bottom of the market. There must not be a pulse. But a lot of people just, they equate that to being the bottom of the market, but it's all relative. We just got done with this massive whirlwind where people, very, very financially viable people, still couldn't buy real estate 2-3 years ago. It was impossible for them to get their hands on a property unless they were paying cash and paying $50,000 above, no inspection period, closing in 10 days, like all these really crazy terms that they were agreeing to. That's so outside the norm of what a typical real estate transaction requires and demands. So I like seeing stable markets. I do like it when we have a decent amount of monthly supply in there, but people are still transacting. There is going to be a lot of transactions that go down this year, right? And so it's going to be a matter of, are you prepared for what market you're entering and how you're going to respond to that, and what type of financial feasibility you're going to bring to the table? Because even though we have been seeing a little bit of a down market, sellers have been stubborn. They're saying, you know what, if I'm not going to get my number, then I'm not going to sell, because why give up my 3% interest rate?
Yeah.
Why go through all of that?
Yeah.
So the juice better be worth the squeeze if I'm going to sign off on that contract. And they've remained stubborn. And you know what? I think that has definitely helped the overall fabric of the real estate market.
I agree.
And getting us through these hiked up interest rates that I blame Justin personally for.
Yeah. But he brought us bourbon.
Yeah,
So take it easy on my back. He's my favorite today. Yeah, when I take a look at that 36,000-foot view, I can right now I can only speak to sellers right now. If you are trying to sell a house in this market, the word that comes to my mind is patience. Don't be desperate. Just be patient. Just understand the days on market, they're what they are. We got sellers that are selling homes, gorgeous homes, but they're expected to sit on the market a little bit longer. They're getting the activity. It's going to take the right buyer. Your house will sell if it's properly priced. we're just not in COVID days. And so the word for me is patience. But regardless of who you are and where you're at in your real estate journey, we would love to speak with you, share our real estate investment strategies, our home buying and our home selling strategies. And more importantly, if you'd just like to get a hold of our numbers or our insight to how we analyze these numbers, all you got to do is text the word market to 623 AZ Recon. That's market to 623 AZ Recon.